welcome back. Thank you so much for tuning in. Today's video is going to be FHA versus conventional loans. I'm going to share all the scoop with you. I'm going to go through and explain some of the differences of these programs, some of the pros and cons of the programs, and I've even got some free cheat sheets for you to download that you can have for later as reference points. Stay tuned to the end for all the scoop. Thank you for being here and welcome to your one-stop shop for anything and everything mortgage education. I drop new videos every Tuesday and Saturday. My name is Stephanie Weeks. I wrote the international best-selling book, Mortgage Peace, and I've created this channel because I want to share my 17 years of experience in helping so many customers with mortgage financing and help you to navigate through the ocean of information on the internet. I've been recognized not only by Mortgage Executive Magazine, but also the Scotsman Guide for Top Originators for being one of the top 1% originators in the country. I am here today to share my 17 years experience with you and try to spread mortgage peace that helps you to navigate through the multitudes of information online when it comes to mortgages and try to simplify it. That is my goal for this channel. Knowing the difference between conventional and FHA, it's really, really crucial. They both have their positive points as programs, and some or one may be much, much better for you than the other because it is very much based on circumstance, situation, goals, and your plans for the home. I am going to cover 6 topics on this subject of FHA versus conventional today. I'm going to cover the down payment difference, some credit score differences, gift differences, debt to income differences, PMI differences, and for number 6, let's figure out which one might be better for you. I'm going to let you know what you should be considering if you're deciding between these two programs. Number 1, down payment difference. Did you know that you don't need 20% down to do a conventional loan? There are so many people that still think that's the case. There's actually an option with conventional for qualified buyers with as little as 3% down. Conventional loans do more on average have about a 5% down payment, but 3% is an option. Compare that to FHA. FHA's minimum down payment requirement is 3.5%. So 3%, possibly 5%, compared to a 3.5% down payment. That's one difference that might make one program better for you than the other. Number 2, the credit score difference. Each program does have different requirements when it comes to credit scores. Generally speaking, an FHA loan is more for an average or lower borrower credit score. With conventional, I would say it's somewhat of a sliding scale, and what I mean by that is if you need mortgage insurance, then your lender might require certain credit scores. If you don't need mortgage insurance, meaning you're putting down 20% and going conventional, then you might actually get away with having lower credit scores, even below average. The credit score requirements are going to vary lender to lender because while conventional, which is Fannie and Freddie, compared to FHA, which everybody knows them as FHA, it's actually Ginnie. So Fannie, Freddie, and Ginnie, it's like we're having a little picnic here. They have different requirements that they set, and then individual lenders that are gonna lend the money and be on the hook for financing you, they set their own requirements as well. So FHA, Fannie, Freddie, Ginnie, they might say you need a 580 and that's it. But your lender might say, I don't take below a 640, or I don't take below a 620, or I don't take below a 660. So you need to check with your lender to see which one applies. I find that if you have a 660, maybe even a 680, I kind of toggle back and forth with this, or less, FHA seems to be a better sweet spot of a better deal for borrowers in that circumstance. In comparison to people that have a 660 or 680 or better, conventional seems to be the sweeter spot for those people fitting in that box, if you will. The difference is that FHA is much more lenient on credit score when it comes to interest rate. Conventional not so much. So without excellent credit, you will absolutely pay a higher interest rate than the next person when you're going conventional. On top of that, FHA, the mortgage insurance is a flat calculation. Well, there is a small sliding scale, but it doesn't apply most of the time because most people put down a low down payment. With your low down payment, the benefit of FHA, if you have average or below average credit, is the mortgage insurance is just a straight calculation. Conventional, the mortgage insurance is actually based on credit score, loan to value, loan term, loan type, and a number of other things. It's somewhat of a sliding scale. So when you have average or below average, you're probably going to pay a higher interest rate conventional, and you're probably going to pay higher mortgage insurance. Number 3. Number 3 is the gift difference. While conventional and FHA both allow for gifts, there are some differences in who the gift is coming from. Very, and more importantly, in my opinion, how the gift is traced and tracked. Conventional seems a little bit more flexible on this than FHA. And depending upon whether or not co-signers are involved, a gift versus not a gift could have an effect on your loan to value going conventional more than it might going FHA. I would say in this example, when I'm dealing with gifts, it's both fine, do not get me wrong, but I do feel like conventionals got some easier ways to verify that gift money over FHA. Now we're gonna go into number 4. Number 4 is comparing the debt to income ratio. To try to keep it simple, with conventional, if you don't have mortgage insurance, you might have a little more flexibility on the debt to income that's allowed. And when you have mortgage insurance, debt to income on conventional is one of the things that also affects the price that you pay for that mortgage insurance. Comparing FHA to conventional when it comes to debt ratios, I find that FHA is dramatically more flexible on an overall debt to income ratio and gives you a much bigger box to fit in than when it compares to a conventional loan. For the DTI perspective, if you have even great credit, it's not necessarily average or below, but you have a high DTI, FHA in that case might be a better deal for you specifically. Okay, we are on to number 5, and that is going to be PMI differences. First, let me clarify. If it's a conventional loan, it's called PMI, private mortgage insurance. Actually, if it is an FHA loan, it's called MIP, which is mortgage insurance premium. I'm going to use those terms interchangeably in this section as we talk about number 5 and try to give you some of the simple differences between the two programs. Number 1, FHA has an upfront mortgage insurance premium and a monthly. In the majority of situations, you will pay PMI for the life of the FHA loan. Comparing that to conventional, you don't have upfront, you only have monthly, and that is avoided completely when you put down 20%. FHA, even when you put down 20%, you still have mortgage insurance. Those are a couple of those main differences. I know what you're thinking already, and I want to stop you right there. You're probably going, oh my gosh, well FHA, the PMI is for the life of the loan. That's so awful. I'm not going to do that loan. Okay, calm down for a second. Most people that say that, when I say, how long do you think you're going to live in this house? Most people seem to say 3 to 5 or 6 years. Well, guess what? Unless you've got a pretty good down payment, if you're doing minimal down payment on both programs, even with conventional for that 3, 4, 5, or 6 years that you're in that house, you're probably going to pay PMI anyway. So who cares? Don't get stuck on things that are partial truths or things that don't actually apply to you specifically. Yes, I think that it does suck that you could possibly pay PMI for the life of an FHA loan, but nothing should be stopping you from refinancing at some point if that ever becomes an option. And I would rather have an FHA loan with PMI for the life than not be able to buy a house because I don't qualify. So remember, Don't just go to the negative of things. Make sure we're looking at all the pros and cons of each thing and make sure of what does apply to you in the first place. Let's go into the next topic, which is, or not a different topic, but number 6, kind of bringing this full circle for FHA versus conventional or conventional versus FHA, because I've said it in different ways throughout the whole video. That's okay. Which one is better for you? That is the question that we're talking about here. Which one is better for you? And I'm going to tell you, it depends. It depends on your credit score. It depends on your goals for the house. Are you going to live there forever? Are you going to sell it? Are you going to move out but keep it forever? Do you plan on paying it off quick? Do you plan on taking the full term to pay the loan off? What is your credit score? Because that's huge. What is your debt to income? Because that is huge. What is your credit history when it comes to different things such as collections, charge-offs, disputes? Because guess what? That's going to make a difference as well. What about your job history? What about how much savings is in the bank? All of those things, which are so case by case, that is what is going to determine what program is actually better for you. My point, a great loan officer is going to direct you in the right direction for your situation and your options. And I want you to be open-minded. I want you to ask great questions and know what your plans for the house are. Because sometimes it actually might make sense to take a higher interest rate and higher PMI and go conventional if you don't have great credit based on your situation. So get your numbers, know your numbers, find out the numbers, ask all the great questions of your loan officer. If they say FHA is your only option, conventional might not work for you. But if they say we can take you FHA or we can take you conventional, you want to ask the interest rate for each program, the upfront cost for each program, the down payment required specific for you, because conventional might require 5 instead of 3 based on your situation. So you want to ask the down payment required. What's the difference in the monthly mortgage insurance? What's the difference in the total monthly payment? What's the difference in the total cash out of pocket, not just the down payment, comparing the two? And then based on how long you anticipate having the loan, what is the PMI cost over that time frame? And if you want to calculate the whole 30 years, it's fine. Maybe you'll do a 15-year, it's fine. Get the answers to those questions, and that is how you're going to know if FHA or conventional is right for you. I hope this made sense. I hope it really helps. That's my scoop and my 2 cents for today. Comment yes below if this video has helped you get a better understanding of conventional versus FHA. I really hope you liked the video. If you did, please give it a like. Please subscribe to the channel if you have not already, and share it with your friends and family. Help me to spread mortgage peace. And as always, I look forward to your DMs and connecting on social media. My Insta handle is _TheRealStephanieWeeks, and I hope to hear from you soon.